Hey guys, this is Julie. There really wasn't any chart action to look at for today because we had the holiday, but I'd want to prepare for tomorrow. So this video will get us ready going into tomorrow's session and take a look at the volatility, what I'm expecting going into Wednesday's FOMC minutes that come out. We also have GDP this week. So let's take a look at the calendar first. Tomorrow, Tuesday, we've got some potential inflation numbers with some services PMI and manufacturing PMI. The PMI is the Purchasing Managers Index, and that can lead us into looking at new orders for the purchasing manufacturing PMI. We want to see if there's any future economic activity expected. So if the new orders are strong or above 50, then the future activity is likely to be good. Right now, we're in contraction mode. They're forecasting a 47, still below 50. So they're still, showing that contraction. Likewise with the services PMI. So we want to make sure that we go under the hood and not just look at the number, the actual number that comes out, but we want to go inside the report, look past the headline figures, go and find out what those new orders and employment are telling us. Is this activity expanding or still contracting in growth for the manufacturing economy or the services economy? We've got existing home sales coming out. They're forecasting a little bit better than the previous report, so that would be strong. Um, and people are probably trying to get in front of, the 5% interest rates that's coming, but still pretty off compared to prior periods. I was going to click this and go inside the report, but it's not pulling up. Here it is. So we can go inside and see that we're really off from the peak. Um, and, you know, that's good in a way. The prices need to come down. So as interest rates go up, the prices are coming down. So we are waiting for that reversal, that reversal back up to show that, the market, the market is absorbing these, interest rates. The pricing has matched what the interest rates are doing, and buyers are starting to snap it back up. So right now the real estate is a little bit cool, right? So we've got cool real estate and cool services PMI and cool manufacturing. Everything looks, better for Powell's Wednesday's report, but I'm telling you from last week's PPI that was hotter, than a cat on a hot tin roof, they're going to be pounding some pain, and that is going to be Wednesday, in my opinion. So watch for these minutes. The Fed Chair Powell did come out and say that we would get forward guidance from his minutes on what they're thinking in the future. So we don't have to, parse the tea leaves too much. He was pretty clear. He said, you're going to understand exactly our path once you read these minutes. So he's laying it out. And then we've got a Fed member, Williams, speaking after that. So Thursday's GDP, and this will be a big number. Let's see. This will be our preliminary release. So it'll be our first glimpse at the economic activity for the fourth quarter and give us our annual GDP. So it's going to be a pretty big number. They're expecting 2.9. Um, January's was 2.9. So I guess we already had a report come out this in January, so this would be the second release. So we'll see what that number's like. The Atlanta Fed GDP now, let's take a look at that. And they're at 2.5, so they're a little bit lower than 2.9. So we might be setting up for a miss or a beat. I mean, um, if they lowered it, then we might be coming in for a beat. But the range of the consensus is way down here. So that's a pretty wide margin. I mean, I have no idea what it's going to be, but be prepared for some activity on Thursday for that number that comes out. And then initial jobless claims, crude oil inventories are on Thursday due to the holiday. And then Friday, we've got more PCE numbers, more inflation numbers. So it can be a volatile week. And let's look at the volatility right now. The volatility has been extremely compressed. You see how low it is? Um, we have been edging up on the low vol, um, but we have not gotten anywhere near the 2 or the 3. We're still in the low ones. So here's a 2. This is the JATS PT on the vol. And you can put your JATS PT indicator on the volatility on the VIX and get at an approximation of what the forecast will be for the E-mini S&P 500 using this. So at 1.37, you multiply that by 100, and that's 137 points. And what you do is you get your Dunkian channel and you measure 137 points from your 14-point range. So set up a 14-point Dunkian, and when you bring that down, let me go to the top, that would be 4208, and 137 points below that. Get my little calculator out. 4071.50. There you go. And look where price closed today. Right in front of it. So we were right there, came right to it, and the market did not break the range. So we stayed within our 14-point range, held at the bottom of it. So ranges do break, um, and that could happen uh, going into tomorrow's, economic PMI reports. But since they're expecting a miss, a beat, it may wait to move into the report on Wednesday for the Fed minutes. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we're still within our 14 period range, and it can start moving down. And what I like to do on my measurements is move it to the midpoint, the midband. So if I'm still at 137, I would move it from the midband down, and it would, take us to approximately 39.90-ish. So if we were to go from 128.50, 39.91.50. That was close. There we go. So 39.91.50. And what I like to do then is look for my, here is a monthly, quarterly. You can see we're right in the middle of these ranges. I have another chart ready. Right here. And 39.90, I don't have any, that's way down there. So let me put a monthly level on here. I need to put some more days on the chart. First, I'm going to take the profile indicators off the chart. And then I can add my days. Still updating, one moment. There we go. And here is 38.83. So you can see that the monthly too for 30 days is just under where the support would be if that range broke. When it breaks, it clearly will break. So I'm going to also put a monthly on. So you can put a calculate from a 30-day and a 1 month and a 4-week. So I'm going to run all three. Oops. Okay, so 39.37 is a first standard deviation of the, drum roll please, monthly one. So that looks like it is the winner, doesn't it? So I'm going to add a monthly one on the open and just check it. There we go. So that's perfect. That put us right where that daily is, 39.91.50. We're right there at 39.33. Well, 39.91 is up here, so. But that range is going to gap up. it's not going to stay low at 137. So let's qualify this. Let's qualify this. Um, this VIX range is on extremely low volatility. And once we start, and they have probably been selling the VIX um, call walls to compress it, right? Probably holding a call wall at 22 is my guess. Right there, call wall. So when that breaks, it's going to gap up. And if you notice on the VIX, you see these gap ups. So they gap and run depending upon, the report. So when you see a volatility event, you'll have a gap up, and usually. So this 137 level is not going to be the same. When we had this gap up here, it was very low vol, and then it did go to 128, but it rallied all the way up to 26. So that would be 260 points. So here was 200 points for a 14 period range. 260 points for a 14 period range. So that's when you get the volatility in the market. Here you can see how high it got. It went to 400 points for a 14 period range. That was in May. 300 points and 400 points for a 14 period range compared to 137 like we've had. So that is how we can, rule of thumb, be ready to go. Um, so 200 points, would take it from the high, the current 14 bar high, but it would probably, the distribution will change a little bit. Um, we'll have our 15th bar by Wednesday. So we could possibly get down to, 39.20 area. And we need to look at Quick Strike and see where these volatility levels are going to be expected on the calendar. So we've got the price sheet, I mean. So we can go to our price sheets on Quick Strike. And so this is for Tuesday, and you can see that for Tuesday we have extremely low volatility. We're way down in the tens at the mean, 40.90, 10.90, 11, and 11, 12, 13 in the threes. So very low volatility. Wednesday it picks up a little bit. Um, we start at 13.14, 13.50, and go to 14 and 15 vol. So that you can see that there's a difference between the VIX at 1990 and the pricing sheet. Oops. It doesn't match. The volatility is not matching the VIX. So people have said the VIX is broken, right? But we can put the daily VIX PT3 on our VIX contract. And let me move this to a 30-minute chart so we can see it. And so now we can see that we get more closer in line to what the VIX actually is. So we can look at these standard deviation levels. And if we, I'm going to minimize the bottom part. And let's just take a look at these daily distributions. You can see how they stay inside the daily distribution a lot of the time, but when they break, they can really take off. And it's like the same for looking to see where this is going to go. When they take off and break a range, you can use your tails. We have tails fib levels, and this will give us an ability to measure um, going out. It even exceeded it, so we could change our upside tail to 1 and 1.25 and 1.5 and 2, just to give you a, there we go. It went to 1. It went all the way to 1. Do you see? Let me just get rid of everything else so we can see this. It went one time outside the distribution. Do you see that? One time. So that's how accurate these daily distributions are. It went one time outside the daily distribution to the tick on the VIX. I hope y'all are seeing this. Very, very cool. Let's see if it's done it before. So you could potentially know, so it hasn't done it in a while. I need to add more data. Go to 1500 days. But that's really cool. So we could know where to expect the deceleration to come in one time the daily distribution on a maximum excursion, right? How cool is that? That is awesome. So here was an excursion out. Let me do a couple of different ones. Let me do a 0.5, a 0.68, and a 1. Well, here, let me just do it like this. A 0.34, 0.51, 0.68, and a 1. There we go. So almost half that stopped at 50%. I've got 51. So if I made that 50, it would, oops. I bet it touches it. Yep. I'm telling you, these algos, they're so mechanical. Look at that. 50% of the daily range. Mm-mm-mm. 50% and 100%. All right, so we know where they're going to go when they break out, and now we can measure them because we've got the VIX numbers beside it, right? It's got the plots. So if it gets to one time the range, let me go back and look at COVID in March. See how far out it got. Here's a good one. It got all the way to one time and kept going. August. Here it gapped up and went beyond the one time. We can add more fibs. I mean, that's not a problem. We can add another instance and keep going, right? So, so it can exceed the one time also. Well, that's not one time. Yeah, that's one time. So, in fact, let me just do that real quick for grins. So to add another instance, I'll take this off. We can just add another indicator, right? So we'll add another daily one close. And for the fibs this time, we're going to start at 1.34, 1.5. Well, we'll just do 1.25. Don't have to get too fancy. 1.75 and 2. Okay, there we go. So now I've got it all the way up to 2 times the range. So, but you can play around with your fibs, and all I'm trying to share with you is that we can control the volatility. We can set the thresholds where we want them, the fibs, and we can see that when it gets up into these fib levels, we can capture the plot so that when it gets above a certain level with a high or a low, and you want to decelerate back in, right, with your volatility, use your trading strategy on that deceleration back in after a vol spike. You can now measure it and see it with the JATS PT indicator and have the threshold. so that you know that it's above 2, and you can actually capture that to sell your vol at that level with Bloodhound and Blackbird. Pretty cool. So ordinarily, I mean, like right now, we are compressed badly. I mean, they were sitting on that vol level, sold a call wall on it, compressing it. So it will gap up, and when it does gap up, that's when it'll get back above, your ones and twos levels for your volatility. And price will start coming down quickly if that happens. If everything goes well with these reports, there's no more inflation. Powell says, never mind, I made a big mistake. We're not going to raise rates anymore. The market's going to take off. But I don't think that's going to happen. We have to be realists. The one dove that was on the board, the Fed, Federal, the committee or whatever you call it, Lael, is no longer there. So she went to work in the White House. So there's not really anybody pushing back on them from their hawkish ways, right? So pain, Powell promised the pain, and I think he wants to shock the market. So be ready this week for some more vol. Even though more equity money came into the market, I don't think it's the right time for him to get it too low. But we have um, our ability to look at our higher time frames, and you know seeing these first standard deviations on the monthly and quarterly levels. uh, 39.20 monthly 3, and 39.57 for a 12-week 1. That should provide a circuit breaker, a pause, 39.23, 39.57, and that's what I was seeing for my downside move right here, 39.33, 39.37. So for monthly, 1 month. So 1 month and 3 month are right around the 39.23 to 39.33, 39.37, 39.57. So down here in the 39.30s, 39.20s, you can expect to see some circuit breakers, some, bids coming in. Doesn't mean it would hold necessarily, but definitely we're in the middle of this range. It can quickly gap down to your 40.28 and 40.04. If we put a daily 200 EMA on the daily, I don't have a daily up. Here we go. Let me just put a 200 EMA, and I'll show you where a lot of people will be looking. 40.42. So they're going to be looking at that 40.42 area, and that is a Globex level, 40.42. It's actually one of our new Globex levels, so that may come into play. Um, so 4040. Um, 4042 is a Globex 3, so that could easily get hit on that 200 EMA. And that could get hit tomorrow on the PMI report if it's bad. If it shows more inflation and not contraction, if they get a beat, that could send the market down. Okay, so be careful is all I'm trying to say. We're in some volatile period. We have not had any volatility. And when you see the volatility, you will know it's there. Um, so just be careful. Pick your spots to enter and exit, especially if we're in the earn to trade combine or gauntlet, excuse me, or trader career path. You have minimal risk, and it can certainly be managed. Knowing where these levels are in advance and how much risk that you need to manage the trade. Come up with a game plan. Are you going to just want to attack a level and run your risk off that level? Or do you want to wait for a 5 minute bar to change before you get, you know, involved? I always, think it could be better to wait for confirmation, but it could move away from you quickly, especially if it's going down. So if you're sitting waiting for confirmation at a key support resistance level, you could really miss a big trade. So when the market is moving down quickly, I'm just saying sometimes waiting for confirmation, you're going to snooze, you're going to lose, right? So just be careful. Trade your plan. So if you have an earn to trade um, gauntlet, know what your risk is for the day. Or, have your 15 period risk. So if you're going to be, I'm in a gauntlet mini. I'm going to be doing the 200,000. So my profit goal is 11,000. So my risk 11,000 divided by 15 days is $733. So you can take your $733 and plan your risk according to the contract at 1250 a point, a tick rather. That's 58.64 ticks or 14 points, right? 14.66 points. So 14 points. There we go, 1450. That is my risk, and that is my profit that I'm seeking for one contract. So that gives me a lot of room, actually, I think, to try to find something successfully. And another way to do this, since we have the JATS PT levels, is trade to targets, right? So if I'm going to be trying to trade to a Globex target or this one, I could try to enter when it hits this location, right? Get in front of the target. There's my entry that I'll be looking for because here's my target. And then here would be my risk. So you see that my risk is on the prior day close. That's not a very good spot. Don't ever put your risk in front of a support resistance. So I don't like that. I don't like that at all. I like the risk being on the one, but I don't like the risk being on a major support resistance line like a Globex close. So I probably would not want to choose that. I would probably want to choose a different target to trade to. Something that is going to not put me in such harm's way. So I might want to shoot for that lower Globex 3 and then enter here to get there and um, put my target up here once we break this Globex 1 and I get filled. I'd be back above the Globex 1 for a target and I would be there for my risk. So that looks like a pretty good place. That looks pretty good. See what I mean, Jelly Bean? And then I've got my 733 for one contract. If I want to, and then I could come in at that range box. I could either put the one contract on and try to hold it the whole way, or I could try to come inside that range box, trading to my target using two contracts, um, you know, taking a smaller portion to get there. So there's many ways that you can slice and dice the data to meet your plan. All right. One day at a time. So good luck. I'll make a video tomorrow and we'll have more data to look at. Now we won't have a holiday. And I'll try to get a video recorded each night of the progress that I'm making to let you know how I'm doing and show you the good, the bad, and the ugly. All right? Y'all be good. Hopefully, it's all going to be good, right? Because we're going to plan. Have a plan, trade your plan. Don't deviate from the plan, and just make sure you don't blow your risk anymore. That's what I'm telling myself. You know, treat it as a business. I certainly wouldn't keep a job if I walked in and lost all their money on day one, right? So, there you go. Talk to you guys soon. Have a great night. See you tomorrow.